Eco Money on Money FM 89.3.
We all know sustainability is a buzzword across all sectors, and finance is no exception. But how does that translate to your returns? That's the question you want to know the answer to, isn't it? Well, MSCI research shows that so-called sustainability-linked products in the fixed income space could offer a greenium or green premium. To find out just how much and which sectors top the charts, we're joined now by Jakub Malich, who's the ESG fixed income research lead at MSCI. Jakub, thank you so much for taking the time to speak with us today.
Thank you too.
We've spoken about greenium in the past, and it's an interesting turn of phrase. Obviously, it's a green premium, but I want to find out from you, what does greenium actually mean, and what kind of premium are we talking about when it comes to fixed income?
Thanks for the question. I think it's definitely great to start, from the beginning. So what is greenium? We can talk more broadly. So it is a concept in sustainable finance, wherein green or sustainable assets. It can be, of course, in the fixed income, that would be mostly bonds, but also in the equities market. It can be real estate, right? Real assets, anywhere. It is a concept where these assets that are considered greener versus their, comparable counterparts would trade or be priced at a premium, right? And so let's say, again, if we start in the equity market, if you want to compare two companies, you can look at their profile, apply different measures of sustainability that maybe work for you. Then you can compare them to other companies, maybe from the same sector, same country, with maybe similar financial profile. And if you still see that the companies that you would consider to be greener are trading, differently from their counterparts, maybe we can talk about something like the greenium. In the bond market, in the context of greenium, people would be usually comparing green bonds to non-green bonds. So maybe to explain briefly what those are. The green bonds are bonds, they need to meet certain criteria. Most importantly, they need to finance specific eligible green projects, related to energy efficiency, financing renewables and similar projects. We have both international and national standards to determine which bond would qualify, as a green bond or not. And then, people would generally compare where do these green bonds trade relative to non-green bonds. Again, that would be comparable, right? I would say another maybe advantage of the bond market is that a single company can issue many bonds, so they can be both green and non-green. So we can directly compare green bonds from the same company to its non-green bonds. And again, if we see that they are trading differently, they are priced differently, generally we would be speaking about the greenium, especially if the green bonds are, priced.
And how much is this greenium typically that you found from your research?
This is, again, something I would maybe emphasize the way we look at it. So we wanted to compare really the green and non-green bonds from the same issuers, because we feel like this is the most accurate way. Because if you just compare similar bonds, but maybe from different issuers, right, you lose some of that accuracy. So in our approach, just focusing on the same issuers and looking at their green and non-green, we found that the greenium over the last 3 years, and maybe here I would mention that the market really grew in size sufficiently in the maybe last 3 to 5 years. So over the last 3 years, we saw that there was a consistent greenium between 1 and 6 basis points. This, again, maybe it doesn't sound like a lot, but as I mentioned, we are talking about the bonds from the same issuer, so they generally speaking have the same risk profile and everything, but we would still see a consistent difference in pricing. So that is something definitely to consider. And of course, these differences were also different among sectors and countries.
And that's the next question I was just about to ask you. In terms of sectors, which sector did you see have more of a premium greenium?
So we saw the highest premium or greenium in the utilities sector, which is perhaps intuitive, because utilities, can be considered to be one of the most environmentally intensive sectors, right? Or perhaps the one of the most polluting ones. So also you can argue that maybe if they issue green bonds, right, they can invest this money, for green projects that make them greener, right? That can in turn make them less risky, especially, if the world is transitioning towards a greener economy. And you could say that this could make them more attractive for investors.
There's an interesting point that you put forward in one of your articles or the research, and it says that the improvement of an issuer's environmental or social profile should not support greenium because both labeled and non-labeled bonds should benefit equally from such improvement. So talk to us then. What's really driving the greenium? Is it the types of projects that these bonds are supporting, or what are we looking at? Or is it investor appetite towards green labeled bonds?
As you rightly mentioned, we don't believe this greenium should be really coming from that notion of future improvement of company becoming greener and so on. Because again, how you measure it, but if you compare a green and non-green bond of the same company, even the non-green bonds of that same company would benefit from the company becoming greener, right? So there should be no difference in how these two securities from the same company are priced. Instead, we really think it's what you mentioned, Rachel. It's the supply and demand side of things. So maybe when we start with the supply of these bonds, despite seeing, I would say, rapid growth in the market over those last 3 to 5 years, where really we saw double-digit growth every year. In terms of the issuance of these labeled bonds. If you look at our corporate bond indexes, only about 5% of them, so of the global corporate bond market, would be labeled or labeled bonds, right? So 5% is definitely still not that much. So let's say the supply side is still relatively limited, although it is growing, as I mentioned. Now on the demand side, maybe then the question would be, why do investors want these bonds if they offer similar risk and return characteristics as the other bonds, and so on. So we think there are several reasons why investors are interested in these securities. So maybe to begin with, if we, let's say, have investors who consider positive impact, of course, they might want to invest or buy these bonds because, as I mentioned, they only finance these eligible green projects, which are generally considered to have positive impact. But also, let's say if institutional investors, different financial institutions perhaps want to create green sustainability products for their clients, let's say sustainability funds to invest in. These products and funds are being increasingly regulated to prevent greenwashing, right? So, their creators really need to consider carefully what kind of securities they include in these funds or products, and so on. So, green bonds generally, of course, depends on the quality, but high quality green bonds, mostly would be considered such securities that, can be marketed and sold as perhaps sustainable. So this can be another reason why institutional investors might want to hold these securities. And finally, I think, and it's also a very relevant one. So when we are talking about decarbonization, maybe people instinctively think about the heavy industry, right, which is associated with kind of direct pollution and so on. But of course also financial institutions need to decarbonize, and for financial institutions most of their carbon footprint would be related to their investment portfolios or to their loan portfolios if it's a bank, right? So what they are financing really matters. So let's say, again, if a financial institution wants to become greener, they need to start with their investments. So again, perhaps holding a green bond relative to a non-green bond, can help you, green your own investment portfolio. So maybe to summarize these reasons, I would say that there may be, positives or incentives beyond, risk and return characteristics, why, investors might want to hold these bonds, and that drives the demand and potentially the greenium. And
you've spoken about the size of the market of green bonds and how it's growing, it's changing, it's evolving. And I thought it was interesting that your research also highlights 37% of them on average met all MSCI's criteria for climate target credibility. And that's a huge thing, isn't it? What are your thoughts on that and how the industry is perhaps changing? Because I guess it's only a matter of time, isn't it, until we see a lot of these certifications or regulations and structures become almost a hygiene factor across financial products. So how are things changing on that front when it comes to fixed income?
Yeah, that's a great question. So maybe to unpack it, I will start with why we looked at the maybe where is the connection between the climate, say, trajectory for companies and the sustainable bond market. Very simply speaking, we need capital to finance all of these climate goals, right? I mean, they are not going to happen, on their own. Like a lot of investment is needed. So we thought, okay, we have this view, let's say. So these companies, we can say that they seem to be financing, right? Mostly, I would say, when companies issue green bonds, but also the other type of labeled bonds, which are sustainability linked bonds, and these different labels. Generally speaking, they are related to their kind of decarbonization and their climate path. So we thought, okay, this is a good thing to look at. So these companies, they do seem to be financing these. So do they also, perhaps perform better on these criteria, right? So maybe to mention what these criteria are that we applied when it comes to, say, the credibility of a company's climate trajectory. It is very easy to say, as a company, I want to become net zero by 2050, 2060, right? But of course, such a fundamental change to your operations, it's not going to happen overnight, right? So even if your target is by 2050, 2060, we believe, companies really need to start working on it now, right? And do the planning now, know how they want to get there and so on. So that's exactly what we assess when we look at this credibility criteria. So we look at things like how ambitious are the company's decarbonization targets and how comprehensive they are. So when it comes to the ambition, does the company want to become net zero, or maybe it's just some partial decarbonization? What is the timeline for that they see, right? When it comes to comprehensiveness, again, are they covering their entire emission or maybe just part of them? Also things like, do they want to use carbon credits to achieve this, or do they want to do it more organically, let's say? So all of this that tell us about ambition and how comprehensive the targets are. And also finally, what we think is very important, we also try to hold companies accountable. So we look at whether they have met any of their targets that they set for themselves in the past, and also if they seem to be on track to meet their current targets. Because again, you can say, if the company was not able to meet their targets in the past, probably doesn't give you much confidence that they will do it in the future. So these are some of the criteria that we look at. I think maybe what I would also mention is that how investors can read this. You mentioned that we saw that only about 37% of these labeled bond issuers that we looked at in our report. So if maybe your objective is more to invest in companies who can be more successful in the green transition and potentially, reap some financial benefits of that too, you can perhaps use similar criteria and make your investment decisions.
Okay. So how do you see all of this changing in the year ahead? What are some of the key trends that you see when it comes to sustainability on the fixed income front?
So bond market is only one source of capital for companies, perhaps the most transparent one, and we can definitely use it, to form our opinions. But also there are other important sources of capital, such as bank financing, such as private debt, even private equity, of course, outside of the fixed income space. So all of these need to be considered, I would say, together, right? Because again, transition will require, huge amount of capital and investments. And we need to raise it in all of these markets. But as I mentioned, the sustainable debt market, perhaps it's been really growing steadily at the double-digit pace every year. We don't really see this slowing down, especially because, as I mentioned, the sustainable debt is still a relatively small percentage of the total public debt out there. There are also, of course, many tailwinds to that, including regulation, right? We see different markets coming up with their own taxonomies, right? So what can be considered a green activity, what not, and so on. So all of this brings more certainty to the market, which I think is positive, right? Because say companies, they know what to issue, and investors know, what they want to invest in, right? So we think there are definitely many tailwinds for this market to continue to grow.
Okay, opportunities ahead then. Thank you so much for taking the time to speak with me today.
Thank you too, Rachel.
We've been speaking with Jakub Malich, ESG Fixed Income Research Lead at MSCI. I'm Rachel Kelly, and you've been listening to Eco Money on Money FM 89.3. Now, if you've enjoyed this podcast, don't forget you can go and check out more Eco Money episodes on Spotify and, of course, the audio app. That's AWEDIO. Have a wonderful week. I'll be back with you next week for more eco news and views.